Don't do these mistakes with your tax filing. Hi everyone, welcome to FinTech College. My name is Harsh and you are over here with me at Taxes and Beans. Taxes can be tricky no matter what or where you are in the world. But when it comes to filing for taxes in Canada, taxpayers often make common mistakes without realizing them. Let's have a look at them. Number one, forgetting to report all income. One of the most common tax mistakes is forgetting to report all your income. This can include income from part-time or freelance work, investment income, or even income earned from a rental property. All income earned in a tax year must be reported on your tax return, even if you did not receive a T4 slip or other tax-related documents. Failing to report all your income can result in penalties and interest charges from the CRA. Number two, not filing on time. Failing to file your tax return on time can result in penalties and interest charges from the CRA. The deadline to file your tax return in Canada is April 30th for individual taxes for everyone, unless you or your spouse or common law partner is self-employed, in which case the deadline is June 15th. However, if you owe taxes, you must pay them by April 30th to avoid interest charges. Number three, not keeping track of receipts and expenses. Another common mistake is failing to keep track of receipts and expenses. Many tax credits and deductions require you to provide the proof of the expenses you have claimed. Without receipts or the other documentation, you won't be able to claim these credits and deductions, potentially resulting in a higher tax bill. To avoid this mistake, make sure to keep track of all your receipts and expenses throughout the tax year and organize them by category to make filing your tax is easier. If needed, review the CR's requirement for record keeping to ensure you maintain your documentation for the appropriate amount of time. Number four, claiming ineligible expenses. While it is important to claim all eligible expenses, it is equally important to avoid claiming expenses that aren't eligible. Common examples of ineligible expenses include personal expenses such as clothing or groceries, or expenses related to non-deductible interest on loans. Claiming these amounts can trigger an audit from the CRA and result in penalties and interest charges. To avoid this mistake, make sure to review the eligibility criteria for each of the deductions or credits before claiming them on your tax return. Number five, lack of tax planning. Finally, one of the biggest mistakes Canadian taxpayers make is ignoring the opportunity to do tax planning. Tax planning involves taking steps to minimize your tax bills, such as contributions to RRSP or taking advantage of tax credits and deductions. Ignoring these opportunities can result in a higher tax bill than necessary. This can be avoided. To consider speaking with financial expert or tax accountant who can help you with a smooth tax filing. So with those 1, 2, 3, 4, 5 different ways which we saw that can help you get the tax refund for this tax season. Thanks for watching. Have a good day.